macro. Now, I want to move from the metals, but stay in the commodities discussion. I want to bring in Alan Nuckman. Alan's the chief market strategist at Agora Financial, and he's joining us live from the trading floor at the Chicago Mercantile Exchange here in Chicago. And he's here to talk energies with us this morning. Alan, welcome to the show, and thanks for joining us. I want to dig right into it and get your opinion on why we're seeing so little reaction to the recent heated rhetoric between Iran and the U.S.
Well, I think we've kind of worn out the fear of any policy changes. And the reality is there's been a lot of talk in the last 6 months, last 18 months, obviously. And you've seen the markets have pretty much an opposite reaction. You see initial reaction in stocks anyways. You'll see sell the rumor, and then people buy the fact once it actually comes out, whether it be tariffs or whatever, that the market bounces after that. So I think you're seeing limited reaction today. But oil last week was down about $1.75 on a weekly basis. I think the big issue, and I've been talking to you about this for many, many weeks, and I think we've got something really to pay attention to. We had a weekly key reversal in the dollar index last week. New year highs and a lower weekly close. This could be the catalyst to help out a lot of these commodities if this dollar is truly over this time.
Well, that's going to be something for us to watch, and we'll talk more about the dollar. We're tied to some of this price activity in a minute, but I'm curious if Alan, if you think that removing every drop of Iranian oil from the supply chain is a real possibility, or kind of feeding into what you were just talking about. Is this just a negotiation tactic associated with some of the trade tariffs that we're trying to negotiate here?
Well, I wish I knew, but as you and I talk, it's really about price action. It's not about policy. It's not about politics. It's about price action. And obviously, there's always the potential of a price shock in oil with these disruptions, and something like that obviously could have a big psychological impact as well as a physical impact on the oil markets. So, who knows where it's going to go, but right now the price is not reacting that strongly. We did have a healthy bounce here in the last week or so where we bounced off 66 and kind of regained our footing again. But you're going to see a lot of big moves in crude. I mean, we had a 15% move on the upside in 10 sessions. That's got us to those highs. And then after that, we pulled back about half of that move, as often happens. But the trend still remains strong. And again, for me, the key is this dollar. And let's see where we go from here.
So, Alan, with the dollar coming off that test there, you think that was a failed attempt at the 95 level, another attempt at the 2018 highs? They actually got a new 2018 high, as you mentioned, but it failed to hold those. So key rejection at that point. So this is, again, in theory, the inverse correlation associated with the dollar. We should see, or you expect to see the dollar work its way back down towards that lower extreme, towards the 93 area, and crude continue to inch its way back up now?
Yeah, that's the thought process. Now, let's see how it follows through this week. Last week was just a start. I've been a non-believer in this dollar rally, and look, we're already in July.
Yeah.
So, we went straight down in 2017. We had some short covering and a bounce and some firmness. And again, the president's comments last week are curious, to say the least, about raising interest rates. And he doesn't think that we should be raising interest rates compared to other countries, and it's just not based in fact. As far as he was saying that other countries are keeping their currencies depressed, and pointing at the euro. The euro's been worth more than the dollar, as long as I can remember, and it's held relatively strong here this year. You got to remember, they're coming out of a negative interest rate environment. So, I look at these raising rates as a positive sign. It's like getting an A on our report card. It means that we're able to move forward. Our economy is doing well enough that we're able to raise the rate. So I think that was an interesting comment. But overall, I was waiting for one more blow off in the dollar, and let's see if this is it, that rally above 95, but unable to hold once again, like you said.
Well, Alan, we've got some economic data this week that could potentially move the dollar, but I want to talk before we get too much into the currencies. I want to talk a little bit about last week, the EIA report. We saw a build in the natural gas inventories by 46 billion cubic feet. Reuters reporting that U.S. LNG exports to China declined as trade wars escalate. Or concerns escalate. Are demand concerns weighing on price in the natty gas now?
Well, it's you don't know what's going to happen with these policies, and what is really the worst case scenario. Is the market factoring that in? I like to be the optimist and not try and predict the sky is falling. So looking at the natural gas, we're having a hot summer around a lot of the country, hot summer around a lot of the world. So, in theory, that should help out natural gas demand for air conditioning. So, gas, I think, is going to hold firm here in the summertime, and let's see where we go. Again, we're not quite in August, and that's when the weather patterns really start to be the issue when it comes to here in the Midwest, anyways.
Yeah, it'll also be interesting to watch the dollar tied to the price of natty gas as well. Usually not as closely tied to the crude. But Alan, we're going to take a quick break here, but stick around because when we come back, I'm going to get your thoughts on the currencies. And we'll talk a little bit more about the dollar and some of that weakness we've seen off those 2018 highs. Traders, you're watching the TD Ameritrade Network. We'll be back after this short break.
So, who is the typical options trader? Well, there's a whole wide spectrum, from conservative investors all the way through to speculators. Options aren't for everyone, but they're also not for a highly exclusive club. Options are a derivative product based on a stock, index, ETF, or other financial instrument. Derivatives are more risky than other products, but with options trading, there's a range of strategies from fairly basic to highly complex. So, why might a person consider options? To hedge a portfolio, speculate, or potentially enhance a return? Also, versatility. Options can be used differently depending on things like market conditions, experience level, and risk tolerance. That's where TradeWise can help. We offer 10 different strategies from beginner to more advanced to show how a professional might navigate a trade. It's wisdom earned on the floor and delivered straight to your inbox. Don't just trade, trade wisely.
Feel that? That's the beat of global markets, the rhythm of the world. But to us, it's the pace of tomorrow. With ingenuity, technologies, and markets expertise, we create the possible. And when you do that, you don't chase the pace of tomorrow. You set it. NASDAQ. Rewrite tomorrow.
With an hour left before the close, you need all the information you can get. Join me, Oliver Rennick, for Market on Close. Analysis from some of the smartest minds in the business through the lens of stocks, options, and futures activity. We'll interpret the news you need to take action. Exclusive content for investors looking to cut through the noise by cutting the cord. Market on Close, weekdays 3 p.m. Eastern, 2 p.m. Central Time, only on the TD Ameritrade Network.
Welcome back to Futures with Ben Lichtenstein. I'm rejoined by Alan Nuckman, the Chief Market Strategist at Agora Financial. Alan, before we went into break, we were talking about the dollar on the move, coming off those upper levels and the impact that it's had on crude. And while I want to dig into the dollar a bit, first off, last week, has anything changed for Powell, considering the president's recent pushback on higher rates?
Wow, I don't know. If your boss says something like that, how do you react? Are you going to continue to follow the plan? I've got confidence in the Fed, though. Over the last 8 years, they played this perfect. They played the market exactly perfectly. You may not agree with their policies or their role, but they've got the stock market back to where it needed to be. And their second part here is they've actually sparked a bit of inflation. That's what they wanted to do. So they're following their plan. And if you look at it, their plan is to raise rates 0.25% every quarter. And even if we did that for 3 years, that would still just get us back to more normalized rates around 4.5% for the short end of the curve.
Yeah, even Powell's comments last week seemed to point in the direction or echo previous comments in terms of sticking with the plan, as you mentioned. But the U.S. position on the dollar has also been made very clear. Back in January, Mnuchin had comments on the dollar and talked about how a weaker dollar was good for the stock market. And recent comments, again, related to higher rates. Is it possible that all of this is just kind of fired back and it's actually contributing to the recent rise that we saw in the dollar, just to that new high?
We're living in a weird world, that's for sure.
Yeah.
I've never seen in my life where people actually talk out loud about these things. Yes, we know that any president wants rates lower, and doesn't want to be in rising rate environment. And for Mnuchin to say what he said, that's obviously one of the biggest gaffes of the year, to say that out loud. A lot of times you don't have to verbalize what you're thinking. Everybody knows, what you think is the best policy would benefit you the most. But it's just so interesting that this now is just normal conversation, and no one's shocked. I mean, people should have been absolutely flabbergasted by that interview that the president did last week, and it's just another day in America. So it's just limited reaction. But like we have always talked about, the price action, making that new high and a lower weekly close is hugely significant. If we get some solid follow through to the downside, we could start to squeeze some of these buyers of this dollar that believe that the dollar is going nothing but straight up.
Yeah, another thing hugely significant, also central bank activity, which is going to start off this week. We've got Draghi coming out, back in full swing. He's going to kick things off. Then it's Bank of Japan, Bank of England, and into the FOMC. I'm wondering if you think some of the weakness that you expect to see in the dollar could come from potentially more hawkish comments from Draghi this week?
Well, he shot himself in the foot, a couple meetings ago. I don't remember, it wasn't that long ago, when he said we're not doing anything for all of 2018. I mean, he just laid his cards on the table. So, I don't know how impressed the market's going to be by anything he's going to say if he's already, made the point that nothing's going to happen here this year. So we'll have to wait and see. What I'm finding so interesting, we keep talking about the dollars, is coming back to interest rates, that we're just going absolutely positively nowhere. Absolutely nowhere. Looking at the 10-year note. The 10-year note's been in a half a point range for a month. Going absolutely straight zero, nowhere. And if you look at it over the past 2.5 months, we've been in about a 2-point range. So we're not getting any price movement. This consolidation obviously is a sign that somewhere along the way we're going to get some sort of significant breakout. I don't know which way it's going to go, but we can watch for that. But right now we're getting no movement as far as rates go.
Alan, I want to talk a little bit about some of these individual currencies, because there's all this focus right now and talk about a potential for a currency war. With the recent new 2018 lows in the yen, can we assume that traders feel that Asia has more at stake than, say, the EU, and that's why we're seeing more weakness in the yen than we're seeing weakness in the euro currency?
I wouldn't agree with that necessarily, because there's battles on all fronts.
Okay.
I mean, there's currency battles everywhere. So to say one is a bigger war than the other, I'm hard pressed to see that. But if you look at China, the China market finally had a bounce last week after selling off about 10%. So I'm thinking that they've come to the realization that the worst case scenario is not going to happen, and so we're getting a little bit of firmness. So from a trading standpoint, I'm looking more to be a buyer, I think, here at these levels. You saw the yen have a bit of a bounce last week as well after dipping below 90. So I think some of the worst may be over there. And to get back to Europe, I've always been somewhat positive on that euro currency. How many years have we had the discussion about the death of the euro currency, and that it was over? And obviously we haven't even come close to anything, any of that being reality. So right now we're at the 118 level or so in the euro currency. Again, I'd like to see a push and see what kind of reaction we get at the 120 level, and I think that's going to tell us a lot in that euro.
All right, Alan, last question. I'm wondering, you brought up the yuan. I'm wondering if some of the price activity we're seeing there, it's been categorized as currency manipulation, but do you think it is, or is this really that rally that you mentioned, for example, is this really just that price discovery process, the price probing process associated with normal market activity, supply and demand?
Yeah, I'm a believer in the markets, and I think that's what's, it's just more market function. If we go back to I don't want to get too much into the politics, but they were a currency manipulator, then they weren't a currency manipulator. Now they are a currency manipulator again. I don't know. It's making my head spin. Again, that's why we have to focus on the one thing that I can gauge, and that's price. And let's see how things continue to react from here. But like I said, this is a very important week in the dollar, and this could be beneficial to a lot of commodities.
All right, Alan, thanks for coming on this morning. We'll continue to keep a close eye on the dollar after rejecting those New Year highs last week. Traders, that's Alan Nuckman. He's the Chief Market Strategist at Agora Financial. And